Good morning, Brother Will.
Good morning, Brother Rich. How you doing this morning?
Better than I deserve.
Awesome. Glad to hear it as always. So,
Can I show you this cup?
now what you got there?
I got this at the Culloden Battlefield in Scotland a
Mm-hmm.
year or so ago, and I pulled it out because I'm thinking, the series you've got coming up, The Wall, and some things that may be coming up. And this just reminds me of, here it was, the British Empire didn't realize they were going to have
Sorry, brother. Bear with me 1 second here.
take all the time you need. What I was saying is, the British Empire didn't realize it's fixing to have a civil war in the mid 1700s, and yet it did. And you tour the battlefield and look at some of the things like they did an excavation, and at the line of departure, there was a little defilade area, and all the men were lined up there with their muskets, and they took their watches off, their rings off, dug a little hole in the dirt, stuffed all their valuable possessions because they knew that, if I survive this, I'll come back and get them out. If not, so it was interesting to hear one of the guys discussing all the stuff they had found there. It was really heartbreaking. But my point of saying all that is, you never know when civil strife is coming.
Mm-hmm.
I mean, there are some predictors you can look at, but at the same time, nobody would believe it. I mean, the Guns of August talking about the lead up to World War One. There can't be a war. What are you talking about? What? It's in nobody's best interest to have Europe torn to pieces. This doesn't make sense. Who's ever saying that is a loon? And yet it happened.
Yeah. Well, and look at World War II.
Mm-hmm.
Who would want to fight America?
Evidently, Japan. It was
And Germany. And
was that me and
Italy.
you talking about that last week? Yeah, I think it was, right? As far as like.
Actually, you brought up how it's mirroring it now the way we're pushing China the same way we pushed Japan with the oil embargo back then.
Mm-hmm.
And so apologies for that. My bride is setting up my new iPhone. She didn't realize we'd started yet. So, I mean, there's just everybody tries to apply logic to a thing to something that involves humans, which are at the core emotion driven.
Yeah. Somebody was who keeps track of these things. I think it was on Saturday. There's been 30 political murders so far since Trump took office.
Really?
Yeah. So and he was breaking them down, and it was like, holy cow, and of course he's been 2 assassination attempts, and I think we lose that minutia in the day to day. Like, oh yeah, okay, yeah. This is unprecedented, guys. So
and I think we lose that minutia because of the media bent, right?
Mm-hmm.
If somebody would have taken 2 runs at Obama, we'd still be here every time he was introduced. Here is President Obama, 2-time survivor of assassination attempts.
Yeah, I absolutely agree with you, man. What do we know about the kid that tried to assassinate him at Pennsylvania?
Nothing.
Those secure phones and all the other stuff he had. I'm sure the FBI just couldn't crack it, so they just put him back in evidence and moved on.
Yeah, it's just like a traffic ticket, right? I know. It's not like really did anything.
Are you perfect?
No.
I love that pause, Will.
Yeah.
Yeah, I have a career in acting, my friend.
So, and really, how much do we know about the one in Florida with Trump?
That's exactly right. Nothing.
We know he was a big supporter of Ukraine, and that's why supposedly he hated Trump. But that's it. That's the only thing I know about him.
I don't buy that.
Yeah, and he was too stupid to leave the rifle barrel inside of a bush that was right there. Those are the 2 things I know about the guy.
Oh, thank God he wasn't trained. I mean,
yeah, no doubt, right? Yeah. Or had any common sense.
Right. I don't know what's going on, man, but none of it smells good. We've got Alan Kelly on. Good morning, Alan. So glad to have you on. Coin number 1571. Well, what is this coin number stuff?
I just knew you were going to ask that, and I'd have to move my computer, and I don't want to disrupt things a second time. That gives you access to the American Warrior Society training vault, and that gets you everything. Oh my gosh, we got white belt, BJJ, white belt to blue belt. Most importantly, I think is the assessment. Figure out where you're at. can't get training on the right stuff until you figure out where your weaknesses are and work on your weaknesses. You got rifle, pistol, you've got home defense, vehicle defense, bug out bags, right?
Yep.
You got a number of articles written in there. Yourself, Dr. Fuller, have written articles. There's a lot of stuff in there, and I'd like to throw in there. There's the competition side, and I will admit, when I first found you guys, I really poo-pooed the competition side. I was like, yeah, whatever. It's a game. All the stuff that I said back then, and you still hear now. But you know what? You're learning to shoot a gun fast and accurate. That balance, right? When can I go fast? When do I have to be accurate? That, and I had an experience which isn't worth going into too deeply, but luckily it never got to the shooting part, but I was prepared to, and I figured out I planned out a stage. It was a rural environment out in the woods, and I figured out where I was going to go and what I was going to do if it went ugly, and I realized I just planned a stage.
That's right,
and that's when I started shooting USPSA. And it's made me a better shooter all around because I've learned just how hard I can push myself and still make, certain accuracy standards. Yeah. So if you're like I was, start competing. Plus, you meet a lot of like-minded people. It's a lot of fun.
Exactly. So if you want to check into all that, click the links into the very top link in today's show notes, and you'll be able to take advantage of that. If you did not check out the American Warrior Show episode 400, that's right, guys. We've been around now for over 10 years. I think it's 11 years now, actually. Episode 400 on Operation Eagle Claw. It's me, Dr. T.C. Fuller, and retired Colonel Rudy Kaspar. We break down the failed rescue attempt in Iran. I've gotten some really good feedback on that, so thank you to those that really enjoy that. Will Parker is on coin number 800. Will Rhodes, our good friend up there in Missouri, coin number 2269. Will Parker says, good to see Mr. Hair again. Coming from Mr. Mustache, I guess so.
Hey, yes. I'm only trying to keep up with that mustache you got going on there.
Mustache, yeah. That guy who's famous for saying that, do you know that Generation Kill?
Yeah.
The Sergeant Major. Do you know what happened to that guy in real life?
No, what happened?
He got busted for child pornography as a retired sergeant major and is doing like 20 freaking years, man.
Yeah, as he should.
That a scumbag. Yeah. We know that CNN didn't attend any other Trump rallies that year, but we're in Butler. Very odd.
It is odd. It's called the Clinton News Network for a reason.
Yeah, that is a good point here. Mark Hamilton is on, says, good morning, gentlemen, from Ontario. John Shriver says, hi from Yukon, Oklahoma. He is coin number 1919. Got a great show for you. Damn good show.
And we were talking cars in the green room before we went live. And speaking of cars, Mr. Shriver has a beautiful Mustang.
Yes, he does.
Not a Ford guy necessarily, but that is a beautiful car.
Yep. Derek Gibson is on. Good morning, Derek. He's up there in North Carolina. Alan Kelly says the training vault is a valuable asset, has made a difference in my training, instructing, and shooting. Well, thank you so much, sir, for that.
That is high praise coming from Mr. Kelly.
It is very high praise. Thank you, sir. So, Will, what is this wall image I'm seeing here, sir?
Well, how observant of you, sir. That is a wall. So we're gonna I asked Rich yesterday if we can start naming the shows, because there's times I want to point people to a certain one, and then I have to go searching. Usually I start searching on my PowerPoint slides. And good morning, Tony. Good to see you, brother. And so I asked Rich if we could start naming the shows. So that we're going to call this one The Wall, and we're going to get into why that name was chosen here shortly. But I really want to come up with like a Pink Floyd font or something for this, but I ran out of time last night, to be perfectly honest, guys. So you get The Wall, okay? So we're going to start off with our standard fear greed index, and then we'll get into The Wall.
And Tony is on, since he is still recovering. Yeah, man. Hope you're doing better, sir. Mark is on from Australia. Good morning,
awesome.
Mark.
Good to see you.
Please like and hit that share button, guys. We're just getting going this morning. So this is the fear and greed index. What's going on here? And
you know what? Before we go any further, with Mark being on, reminded me, Australia just had an election, as did Canada. And I understand in Australia, the Labour Party took over again, and we know the Liberals took over in Canada. The Canadian one, I didn't follow the Australian one very closely. Sorry, Mark. But the Canadian one was a lot of it in response to Trump's rhetoric, 51st state and all that stuff. So we're seeing more of that strife around the world, and we'll see how that plays into, well, everything.
Wow.
So, all right. So standard fear greed index start 54. That was 43 just on Friday, guys. I updated this slide this morning when CNN updated this. So things are more positive feelings are coming into the market. We've had that dip. I would right now, my working thesis is we're going to be good until the end of June, beginning of July. And then we may see a little, if we don't get trade deals done, I'll preface with that. If trade deals don't get done, we may see a relatively short-term dip in the market after that, because we're going to start getting hard data in about the slowdown. Sailings are being canceled between China and the U.S. The ports are slowing down dramatically. Things like that. Unemployment may tick up then. And again, if trade deals get done, I think all that gets thrown away. So just something to keep an eye on. May turn into more, may not. With Trump, you just don't know.
No, but are you going to talk about some of the things you brought out last Thursday night as far as some of the things China is doing that's trying to keep their economy afloat?
Not in this show. This is going to be all about this wall, because this is all domestic here. That's important stuff. But I was trying to keep the show under 4.5 hours.
Well, I think it bears repeating. Everybody thinks China is this giant juggernaut, but they're pretty panicked. And yes. About panic, you talked about it last show. As far as they're looking at some stimmy, they're trying to keep the factories open. They don't want to see things shuttered.
Yep.
Which I think is going to drive them closer to the table, don't you?
Yeah, absolutely. And they've quietly pulled some of their tariffs on about $40 billion worth of U.S. products. They're discovering real fast they need us real bad. And so they're talking a good game and then doing stuff behind the scenes. So
Mark reminds us Trump is a businessman, and therefore they misunderstand his actions. And he's absolutely right. And Will and I have talked about it. Will told me to read The Art of the Deal. I did. It was a freaking fantastic book. I highly recommend it to anybody, whether you like Trump or don't. I mean, if you're in business, I think you can benefit from that book in some way.
Absolutely. Remember that famous scene from Patton when he reads Rommel's book?
Yes.
And he said, "I read your book, you son of a..."
And
exact same thing. And they were enemies, and he still read his book. Patton still read his book, and he understood him. And I think that's important. Even if you hate Trump, get it from the library so he doesn't get a royalty off of it, whatever. Even if you despise every page of it, read it. You'll understand the man.
At the basic school where you go to it's a 6-month school to learn how to be a Marine Corps officer, we would do these tactical decision games, TDGs, every morning over a giant sand table. And they've got the sand set up. They've got the grid lines on it. They got enemy coming down, and they're like, okay, who would do what? They go around the room, and he's like, nope, you're dead. You're dead. He gets to me, and he's like, Chief Warrant Officer Brown, what would you do? And I lay out my strategy, and he's like, this is El Guitar. That's exactly what Patton did. So you passed. I'm like, well, I had no idea.
Yeah.
But anyway.
Well, I've always noticed your strategy in Patton. I mean, there's a reason I finally found a way to work that in after coming up on 5 years.
People have always told me that. I don't know what it is.
Yeah.
So student loans are coming due. What's going on here, brother?
So this is one that's been rumbling around for a while. This one, this was another way the Biden administration, just statement of fact here, guys, not a political thing. This is another way they kept the economy churning the way they did, was they just never made people pay these back. And now Trump's like, no, you owe us money, pay us. Going to Mark's comment about he's just a businessman. That would be a you problem, not a me problem, as far as this debt goes. So, and a lot of them are seriously delinquent. Seriously delinquent means more than 90 days past due. About 1 in 5 are seriously delinquent. Of course, that would be 20% using the new math. And I wanted to put that in context. Luckily, this article did that. Before the pandemic, it was 11%. So nearly double it. But the economy was great. So why are these people seriously delinquent? So I think we know there's cracks within the economy. We see it with the buy now, pay later we talked about on Thursday night, I believe it was. There's a lot of cracks out there, and It's the old Clinton. Everybody's 2 paychecks away from being homeless, which was drivel. But people could just be a couple paychecks away from falling further behind on their debt service. And then things can, then with 70% of the economy being consumers, then things start to roll downhill.
True.
So that's what I'm getting out of this. All right. So I'm gonna try a little different format here today, brother. So a little preview of everything, and then we're gonna go through and build the case. So as an investor, former business person, and you as a current business person, you try to, foresee what's coming in the next couple of years and position yourself for that. So I'm looking at this as an investor, a trader, because I try to do both. Is there something that'll be a catalyst in the near to medium term? And I'm defining that as between now and 2027. So basically 18, 24 months. What is the catalyst? But is there one thing that'll can really influence everything? Okay. Why will it have so much influence? Because if you can figure out the why, you can figure out a way to profit from it. What damage can it do? And then our worst, best, and most likely scenarios for it. All right. So let's build the case here. In the mainstream, one of their favorite boogeymen is foreign held debt, right? You always hear China holds so much of our debt, they could bankrupt us and blah, 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 right? Yeah, not so much. There was a time, maybe 2014, 2015, that was the case. Not anymore, brother. And I was really surprised.
Yeah.
I'm sorry, say again.
They divested themselves of that, but why?
Well, that goes, it started before the Russia-Ukraine situation, war, but then it really went on steroids during that period of time because they figured out if I don't hold U.S. dollars, they can't sanction me. They can't hold my wealth hostage, right? It's kind of like, if you have a mortgage and you have your money held at the same bank and suddenly you owe them money, now, they can't hold your money. I get that. But, in a lawless world, they would be able to do that, right? Well, it's kind of the same thing because let's face it, and I wasn't actually planning on saying this or thought about it this way, but it's kind of lawless, right? As America, we kind of do whatever we want.
Of course.
And so, yeah. So
remember
why would I want to hold
that Russia would never invade Ukraine because Biden had his thumb on the nuclear option? Yeah. What does that mean? Is that talking about nukes? No. What he can do is kick them off SWIFT. And they're like, spoiler alert, we got rid of all of our U.S. currency for gold, and you can't do shit to us. So I guess that's a China strategy as well.
I think that's exactly their strategy, right? So we're going to delineate different types of debt here today, but Japan holds the most debt. And I don't see that changing because if we abandon Japan for some reason, they are in a bad way demographically, budgets, you name it. They're in a bad way. All right. So Japan right now holds 4.7% of our total U.S. debt. China owns 2.5%, $800 billion. And if you search this out, guys, you're going to find different numbers all over the place. That I'm kind of bringing together an average-ish that I found. Okay. So can China influence us by manipulating the debt, which is what's often said out there, right? We got to work with China on the tariffs because they can dump their debt. And now, I mean, we're going to have a $1.9 trillion deficit this year. China owes us half of that.
Yeah.
So yeah, it won't make one bit of difference if they do that. It'll be a blip. It'll last a couple months, maybe a quarter, and then we'll just move on. So that then to me begs the question, although I did find it very interesting that Luxembourg this is ranking, guys, first through fourth. Luxembourg. That's a
shocker.
Yeah, I was really surprised by that. Britain kind of surprised me too. So is China dumping our debt really a threat? I don't think so. It'd be a short-term burp in the markets if that happens. Honestly, I would see it as a buying opportunity with any dry powder because it's not as long-term. It's not going to make any difference as far as that goes. Now, if it's a lead up to a war or something like that, that could be different, right? So, but just strictly them dumping our debt, probably not that big a deal long term. Matter of fact, probably a good thing because it gets rid of any perceived leverage they have.
Amen.
All right. So So who holds the rest of this? Well, Federal Reserve holds 15% of all outstanding debt. How did pop quiz? How did they pay for that, brother?
Creating money out of thin air, I would imagine.
That's it. So 15% of it's just Fugazi, right?
It's a wazi,
So 15
woozy. It's fairy dust.
Exactly. In fact, I almost put fairy dust in there. I thought of you saying that right there. So I knew you would get there. Alan asked a very good question. What's happening to BRICS? I haven't heard. I forgot about BRICS until you brought that up, because we don't hear anything about it anymore, do we?
No, weird.
Very good question, Alan. Sometimes it's harder to see what's not happening, right? So I have to do some looking at that. I really don't know.
We'll come back to that next week. That's a fantastic question.
Yeah, that is a good question. Awesome. Knew we kept you around here for something, brother. 6% of it's held by Wall Street. Now, Wall Street, that's investment side, right?
Mm-hmm.
Okay. If we break down in the green box there, state and local governments hold 5% of U.S. debt. That's just a way for them to park cash. U.S. individuals,
are they funding their retirement accounts with that, Will, or what are they doing?
That would be my guess, especially on the state side. I don't know how other states are. Here in Wisconsin, your county pensions are actually through the state government. So, and I would presume some of that, if you get into a locality somewhere that has a fair amount of savings built up, they have a surplus, rather than just sitting in a savings account, they might put it in short-term bonds, 1 to 3 month bonds, get a little better rate than a savings account. U.S. individuals, you buying bonds, 10%. Commercial banks, 5%. Again, they're just parking short-term money there. Mutual funds, this would be your 60-40 portfolio, your bond portfolio. That's 11% of the outstanding debt. Foreign investors, 24%. So down there at the bottom, you can see I did the math. It took me about half an hour to figure that out. You get to 76% of the total debt. So where's the rest of it at? I mean, that's 24%. We're already accounting for the Fed, aren't we?
Yep.
So where is this other 24% at? That's in intergovernmental accounts.
What does that mean?
Well, that's a darn good question. If you go to the next slide,
we're talking about trillions and trillions and trillions.
I mean, you're looking at, I'm going to make the math easy on myself. You look at $36 trillion debt, you're talking $9 trillion
in
intergovernmental accounts, right? So hold on a second, before you go further, you got 24% in intergovernmental accounts, which we're going to talk about in a second. You got 15% held by the Fed. That's 39% of the debt. That's darn near half. We know the 15% held by the Fed is total Fugazi, right?
Mm-hmm.
Well, let's talk about the other 24%, because you might use a couple of different F words to describe that.
Like fun or fantastic?
Yes, exactly what I was thinking. Yes, precisely. So if you go to the next one there, brother. All right. So what we talking about, Willis, with this intergovernmental stuff? So intergovernmental debt is debt owed by one part of the federal government to another part of the federal government. So this would be like if Miss Lisa said, Rich, I really want new furniture. Can I borrow the money from you?
Yeah, exactly.
Yeah. Yeah, exactly. So this
Does she make payments on that money?
That's between a man and a wife.
Okay.
Not going there. Okay. I'm just going to encourage you to be a strong negotiator.
Yes, sir.
All right. So this would be the Social Security Administration. At one point, there was a Social Security lockbox, as Clinton put it, right? There was a fund inside of Social Security they would pull money from, and that money just sat, basically. Well, during the 90s, they used it to buy treasury bonds. So then what happened when they bought those treasury bonds and that money went over to the Treasury? Congress just, I'm sure, dutifully and prudently invested that in some way, right?
Probably not.
Actually, it was a prudent investment in getting votes.
Oh,
because they went out and spent that money. So now the Treasury owes the Social Security Administration about $9 trillion. Most of this is Social Security money. Okay. And then when the time comes, the Social Security Administration needs that money, which is coming, right? they have to go, they're going to go to the treasury and go, where's this money at? Here's our bond. We want our money. And they're going to be like, yeah, you know what? We got to go sell another bond to pay you back. So just give me a couple weeks.
Sounds like 3-card Monte, a really sad game of 3-card Monte.
So, and this is darn near half of our debt. And people will make the argument that, well, yeah, we just owe that debt to ourselves. Well, that doesn't really work. I mean, there's a couple cars yet on my dream list, and I can't just write a loan from myself to go buy the car.
But you don't control the printing press.
That's true. And that kind of brings up some other stuff we're going to talk about.
Yeah, exactly.
Because if I had a printing press, the will dollars would be inflating dramatically as the car pile increased.
Bingo.
Yep. So what happens when this needs to be repaid? Well, they're going to have to go issue more debt, right? Because if there's $9 trillion that is owed from the from the federal government to the Social Security Administration, from the Treasury to the Social Security Administration, but they don't have the money for that, but they have to go refinance that, right? Because they're going to have to pull that bond back. Mark hit it perfectly, robbing Peter to pay Paul.
That's right.
And you'll hear people, you'll hear especially those on the political left will say, well, yeah, but half of our debt is doesn't really matter because it's not publicly held. Well, that's true. It's a factual statement. By our math here, about 40% is not publicly held. So you can just write it off and whatever. But when grandma and grandpa want their Social Security checks, somebody somewhere has to come up with some cash to make that happen.
Well, as you said, with your point about will bucks, it inflates. The idea of inflation isn't that the price of eggs is inflating. It's the amount of currency is inflating, which is causing the price of eggs to inflate. So if you just do this, it really only goes in one direction.
Correct. And the only way it goes back is very painfully.
Yeah. Nobody wants pain nowadays.
And nobody wants pain. No politician is going to get elected advocating for pain, right? Nope. I mean, look at the fear mongering that's being done with Trump. Oh, he's going to cut Social Security to make this work. And to my knowledge, he hasn't brought that up at all. I stand by to be corrected on that. Okay. But that's the boogeyman out there in the voting, on the voting side of things. Right. So
I think he knows that, you want to see pitchforks and torches come out, start talking about that crap and see what happens.
Yep.
Hey, let's welcome some folks on before we get going.
Right,
Don Bothwell is on out there.
Awesome.
Beautiful Northwest Montana. Says, good morning, guys. Sorry I'm late. Coin number 2270. Dr. TC Fuller says, late to the party today. Had to go lift heavy things and put them down, then do my hair because will.
Yeah.
Good morning. We got another Montana member here. Coin number 895. Jared is in the house. Good morning, Jared.
Yeah, I might have the hair, Dr. Fuller, but you are one dapper dresser, sir.
He most certainly is.
You got to properly dress for those doctor's appointments, and I'll let you expand on that if you would like. All right, so this is what's Alan have to say there?
So yeah, Social Security would be more solvent if the cronies in our legislature would keep their greedy, dirty, filthy freaking hands out of the honeypot. Boy, he is totally right there.
Yep. And you know what? I think that the blame for that ultimately comes back to the voters, right? Because when they started dipping into that, they kept their jobs. They got reelected.
That's right. Somehow.
So ultimately it comes back to the voters. So I love blaming politicians as much as anybody, but the bottom line is if the majority of people still elect that person, still vote for that person, get them reelected after they do that, it's on us.
I'm anti-incumbent, Yeah. You've been there for a long time ago.
Yeah. Yep, exactly. So so I found this chart. It's very difficult to find current information on this intragovernmental debt. So I circled it up there rather sloppily, sorry. This is September of 2016. I would imagine that these percentages are still roughly the same. I don't know that for sure, guys. I couldn't find anything more current than this. I went back and searched year by year. So about half Social Security. So assuming we keep that same percentage, give or take, we're looking at 24, looking at $12 trillion. Okay. You got defense retirement over there at 15, civil service retirement, and you guys can read off the rest. Okay.
Defense retirement. That's your old pal Rich Brown getting paid.
That's it right there. That's it. So the point here, guys, is the majority of it slightly is Social Security, which is, you can't touch that, right? You can, as long as you don't want to get reelected and you want to be an absolute pariah.
Yeah.
So Mark brought up a good point here. What's he have to say there? Gold member junior.
That's right. Mark over in beautiful Australia says the U.S. Treasury is buying gold. Later on, a revaluation of gold will make the debt go away.
There is, of course, historical precedent for that under President FDR, executive order, whatever it was, in 1933, confiscated the gold, revalued it, right? And this is where it gets into Trump wants a count on the gold, and there's rumors out there, probably started by the Treasury Department, that they're going to issue 50 and 100-year bonds backed by gold. So, well, and that would be a way to monetize that gold. Because here's a trivia question for you. What's a gold in Fort Knox valued at per ounce?
I have no idea.
What FDR value it at?
$39 or something like that.
$33 an ounce. That's what it's still valued at.
Are you serious? Whoa.
I'm serious. On the books, that's what it's at, $33 an ounce. So you get 100x that or 1000x that.
That's right.
And here's the scary part. That sounds like, oh, that would probably solve our problems, right? It's like $2 trillion on a $36 trillion debt. It's
not only that, but they say a lot of it is we're holding it for Japan, or we're holding it for Great Britain, or we're holding it for somebody. So at the end of the day, none of that may be our stuff. Who knows? Yeah.
And well, my guess is we'll probably never really know.
Any of that is zero because it's empty.
Could be.
Spoiler alert. He might be right.
Yeah, could be. I mean, we don't know, but I mean, let's think about that. All the gold in Fort Knox, as the old saying goes, right? It would pay off about 1/36 of our national debt. It would pay for half of this year's deficit.
That's depressing.
It really is.
Yeah.
It truly is. So, these things really start to add. I mean, once you start printing money, I mean, it's just a matter of time.
Yeah. There are no historical examples of fiat currency that lasts indefinitely. They all seem to implode with.
Yep. So, and we talked about in the last show, go look at Ray Dalio's stuff. Great investor. Awesome research he's done on empires and how the monetary side plays into that. So what's
Michael says, and I'll full disclosure, my 2 semesters in accounting in college, I was on the phone with Michael every weekend to help me get through that. He said, that's a true story. It says, is the balance sheet accounting versus debt obligations?
I'm also going to plead ignorance on the nuances of those terms. So if you want to throw that out there, Michael, that'd be awesome. I'm going to suppose out there, one thing that gets thrown out there is unfunded liabilities. I don't know if that's where you're going with that or not. Unfunded liabilities of the government is like 120 trillion or something like that. That's taking into account, that side of it is taking into account all the future payments that are owed. Well, we're all broke. Anybody who has any debt looks broke this year if you do that. Because if you total up all my future mortgage payments on my house and make them all come due right now, I'm broke. Right? But there's cash flow in between here and there.
Yeah.
So the whole unfunded liability thing, that's a scare tactic to sell gold after midnight on some cable news channel. So that's that side of it, is because they never talk about the unfunded income that's coming in. Right. So they only talk about one side of it. What's Dr. Fuller have to say?
It's time for a show on how gerrymandering has effectively made small number of voters the controlling element, keeping incumbents in office forever. Well, there's a depressing thought. Absolutely right. What's Will say?
When legislators write laws to exempt themselves from committing crimes by making it legal for them to commit the act, we feel the results of what our founders were trying to stop. The legislators belong in gallows for their final hour with us. Yes. And we can look at anything from insider trading, which isn't actually insider trading if they do it, but an intern at JP Morgan would go to jail for what they do.
Yeah. Dr. Phillips says, I like to think of myself as an unfunded liability for Rich Brown. That might be the funniest thing I've heard in a long time.
Yeah, that is. Yeah, I think he wins the internet for the day.
Yeah,
all right.
I agree.
So, if foreign dumping can't significantly affect the treasury market, what can? I mean, China's basically, it's half of this year's deficit, right? So they can dump that. And yeah, it would hurt. It would cause some disruption. But
for those that are joining now, was it 2.5%, Will?
Yes, 2.5%, under $1 trillion is what they hold now in U.S. Treasuries. So if that can't really hurt, it's 24% of the total. If all the countries got together and dumped all their U.S. debt, that would, in my opinion, be catastrophic.
Mm-hmm.
However, I don't really see Britain doing that. I don't see Japan doing that.
I don't see Luxembourg doing that.
Exactly. So China's really the big one out there. Russia doesn't hold any of our debt anymore. It's one of the reasons we couldn't really control them with the Ukraine invasion.
Mm-hmm.
And everybody else that hangs on, say, to Russia. I mean, I'm not sure Syria owns a significant amount of U.S. treasuries. So who cares what they do?
Mm-hmm.
Right. So if this isn't going to affect it, well, then what does? Well, let's dig into what can affect it. Basically, it's us. So amount of U.S. government debt maturing per year. There's a big blue line in there in 2025, brother.
Oh, there sure is. Whoa.
There sure is. About $7 trillion worth. Has to get paid off this year. And there's about a $1.9 trillion deficit. I'm going to round that to 2 for just talking purposes here.
Mm-hmm.
Okay. So all this, so you've got when COVID hit and shortly thereafter, that debt for all those stimmy checks and PPP and all those other programs were financed on short-term paper. That's coming due.
I was going to say.
That's coming due. That's what the majority of this is. Okay. Because it was lower interest rates. Now, we can talk about how they should have just, paid the extra half point or whatever it was at the time and just put it on 30-year paper. Mm-hmm. People would have bought that during COVID.
And we could have kicked the can down the road.
And who at that point, who cares what it trades at later? The government's locked in that debt for 30 years, right? Mm-hmm. Like I've got a mortgage on my house. It's a 30-year mortgage. It can get sold off to another mortgage provider. I've got a contract. It stays fixed at 275. Mm-hmm. I don't care. They can sell it around all they want. Same thing with this. But no, they went short-term paper. So let's just generically say they sold 5-year. They sold it all in 2020, which we know they didn't, but just go with me for discussion's sake. And they put it all on 5-year notes. Well, that all comes due in 2025. $7 trillion worth.
Damn.
Now, some of this is a 30-year they got put on in 1995, but it doesn't really matter because it all has to be paid off this year. Well, they're not going to pay it off because they're already running a $2 trillion deficit, so they're not going to pay it off. So they're going to refinance it, which means they need to sell new bonds. So suddenly you're going to have about 1/5, 20% of our debt have to be refinanced this year, which means they're going to have to issue a lot of bonds. Well, that's going to create a lot of supply, right?
Mm-hmm.
Well, if you got a whole bunch of supply and the demand in the past has been lower than what is needed, lower demand in the past than the supply is going to be this year, then that's going to affect pricing. Right?
I was going to say, does does the government just gobble it up if nobody out there buys it?
Well, and pay for it how? Social Security Administration doesn't have any money left, right? They kicked that can in the 90s, right? Mm-hmm. So now, so if they put all these bonds on the market, and let's think about the pricing of bonds, right? The bond and the yield are inversely correlated, right? So suddenly you get all these bonds on the market. If you just think about it like a product, think about it like widgets. Suddenly you get a whole bunch of widgets on the market. There's a new supply from Bangladesh, and suddenly there's double, triple, 4x the size of the widget market has more supply. Price of widgets is going to go down, right? Mm-hmm. Well, if the price of bonds go down, that means the interest rate goes up.
Mm-hmm.
That makes it harder to service the national debt.
Correct.
And then that's locked in for whatever period of time. That's the other bugaboo of it. Let's just say they even go really short term and go 2 years just to get the lowest interest rate they possibly can. Well, now for the next 2 years, that debt becomes very difficult to service because I'm just spitballing a number here for example purposes, guys. Let's say it goes to 7% interest. Well, suddenly you got for 2 years, you have to finance $7 trillion worth of deficits at 7% versus maybe it's maturing it on an average of, I'm just making up a number here, 3%. So you're doubling your debt service on a fifth, 20% of the national deficit. And if you try to go further out, try to go 10 year, 20 year, 30 year, people are going to want a higher interest rate traditionally to lock up their money for that long, right? But now that's locked in for 10, 20, or 30 years. So it becomes a structural problem.
It sounds like something that could lead to stagflation.
It could lead to something worse if we have a failed auction, which is where there aren't enough buyers for the debt. Now what? Mm-hmm. Does that mean people are losing faith in the U.S. government's ability to pay for these things? Maybe that's what it means. Maybe there's just too much of it. I mean, like I want to hold some bonds in my investment account for stability and yield, but only so much. Mm-hmm. I'm old, but I'm not that old. I don't want to hold 90% bonds.
Yeah.
And at what point does it become okay? Yeah, let's just say that it has to go to 7% interest rate to get those bonds sold off. Mm-hmm. Well, that's great, but now I got to lock that up for 10 years.
Right.
And that sounds okay if maybe I was, I don't know, 80, mm-hmm. guaranteed 10% return for 10 years at that age. Okay. Or 7% in return, sorry, mm-hmm. at that age, right? That could be okay. But then what effects does that have down line? Mm-hmm. And bear in mind, that's $7 trillion that we have to finance on that debt that's maturing. There's another $2 trillion of deficit on top of that. So we got to finance $9 trillion this year. That's a lot.
I'm gonna have to explain this to my cat later and see if they can help me with
it. What's Don say there, brother?
Don says, "Thanks for putting up that graphic, Will. I've been reading about the coming due debt for a couple years now, but no one seems to think it's a big deal. The turnover is going to be a big deal for the next few years." Michael says, "The first paragraph of the first accounting book I ever read said the value of U.S. debt is determined by the stability of the U.S. government compared to any entity alternatives. We just might still be the tallest dwarf."
Yeah, absolutely. I mean, we're the cleanest turd in the cesspool, and we have been for a long time. And really, in the end, that's where every currency goes, right?
That's right.
So, and I'm gonna read between the lines of what Michael put there, and say there is no better alternative, right? Mm-hmm. And I think that's absolutely true. I mean, I can't think of another currency I would want to put my savings into other than the U.S. dollar, because
I'm going to get it back.
Right?
But everybody said that about the Dutch krone, or everybody said that about the pound sterling. Everybody said that about the whatever, and we're just another one, of course, in Ray Dalio's cycle of we're going away.
It works it works until it doesn't.
Exactly.
And until or unless we see something that really looks end times, it's still the best place to be.
Yep.
Right. So this is a chart of TLT, which is the ETF that tracks the 20-year plus U.S. Treasury bonds. So 20 and 30-year Treasury bonds. And that's the blue line. The red line is a ETF IEF, which is a 7 to 10-year Treasury bond. Now, what we're told is put your money in bonds. It's safe, right? Mm-hmm. Now, you're not actually buying bonds here, guys. This is really more for trading bonds. Like, I want to buy bonds because I think the price has been depressed for whatever reason. So this is not investing in a bond. It does pay a yield, I can't remember the amount of the yield currently for either one of these, but it's a bond type yield, a couple percent. And so I want to make it clear this is investing, trading bonds type vehicle. Okay. I'm just going to pretend I need these for a second. The TLT, the blue line, your long-term bonds, that's down since the peak in 2020. That's down 50%. So if you put your money into safe bonds, invested in bonds, traded bonds, you're down 50% since COVID. Now, if we think about that, and you're down 29% if you did shorter term stuff. If you think about it, that really makes sense, right? Because during COVID, everybody was scared and it was a flight to safety, right? Safest thing in the world, US Treasury bond. So therefore, that drove demand up, that drove the price up, right? And drove the rates down, right? We all remember the 0% interest rates during COVID, right?
Yes.
So it makes sense that if we return to normal, a trading account with that should see a significant loss because that was the peak, as you can see from the chart. And I cherry picked that for a reason. Okay. Is to show that bond trading in bonds is not always safe. And by trading, I mean you're buying the bond without the intent of actually holding the actual bond to maturity. Okay. So that's the difference between trading a bond and buying a bond. Okay. When when inflation was really high, I went out and bought a couple of short-term bonds that were I bonds. They paid 9% interest for 1 year. That was no brainer. Okay.
Yeah, good.
But there I bought the bond. I was not trading the bond. So understand the difference here. Okay, guys. So we're looking at I'm just going to talk about the longer term one here, looking at a 50% drop over 5 years in the value of that ETF, correct? Now, if you go to the next one, we go, let's compare this to normal times. Let's go back to 2018. That's pre-COVID, right? And you can see from where our chart starts there in 2018, and I picked the peak there, okay, of that era. You can see where you did really well being in bonds up into COVID, right? Because demand went up, price went up for those bonds, right? Well, you're still down if you held it from back then to now not counting in the dividends you got paid. That's all those little circles with D's where they paid dividends, right? You're still down 32%. I'll be candid with you. I don't care what kind of dividend you're paying me. Well, actually, that's not true. If you pay me enough dividend, I'd lose 32% of my money, but you better pay me a whole lot more than 32% of dividends. And it didn't. Okay. And your shorter term bonds are down 13%. So the point is that they don't just stay rock solid. They will trade around with everything else. Okay. So if we see similar price action here, that's an if, when this debt maturity wall, which is the wall we're talking about, comes due and that supply and demand happens, right? There was a lot of demand in COVID where that blue line peaked out, right? If we get enough supply that there isn't enough demand, then you get the way that previous chart looks from 2020 to today, because in the relationship of that 5-year period, there was a lot less demand for bonds. These other things looked better. And guys like me will dump those bonds in a heartbeat and go buy NVIDIA.
Yeah. And you mentioned the wall thank you to the 12 folks watching us live. And if that's the name of this show, and the wall that Will is talking about is the debt service wall. Is that correct?
Debt maturity wall.
Debt maturity wall. Thank you.
Yep. All this debt that's maturing. This is the wall we're going to hit.
And this is a part of a 3 or 4 part series that we're going to talk about here over the coming weeks. Yeah,
this is kind of the setup. Originally we were going to start this week with, I think it's going to be a 4-part series, delving deeper into this stuff. But I really want to set this up because I think this debt maturity wall is going to drive and certainly influence a lot of other things. This is also why this debt maturity wall is why you see Trump so focused on the 10-year Treasury bond interest rate percent yield, because he knows he has to refinance this year. And fair, unfair, whatever, it's up to him to get it done. And this is why I think is why he doesn't care. You don't hear him talking about the stock market anymore. His first term, it was all stock market, stock market, stock market. Why do you think he's harping on Powell so hard to cut interest rates? Because Trump knows they got to refinance this stuff.
Right.
Okay. And my tinfoil hat fell down on the other side of my desk there. But if I were to firmly affix that upon my hair, which I would not do because I would ruin my hair, um, the quickest way to get interest rates go down is a good old fashioned recession. So is Trump perfectly happy causing a recession to get rates down so he can finance this maturity wall? I don't know. It depends how long a game you want to play.
Yeah. What does Mark say?
It says if you invest in your 51st state, your dollar is worth 42% more right now. Yep, sure is. So
Johnny King is on from Kentucky. Good morning, Johnny. Thank you.
Good to see you, Johnny. Us. So the point is that the bond market moves around. You don't hear about it too much because it's not like Nvidia where it's going to triple in a year. I mean, if the bond market tripled in a year or went down 20% a year, we'd hear about it. But it'd be the things that cause that we would be hearing about, not necessarily the bond market's move. So, and the bond market runs everything, guys. I mean, it dwarfs the stock market because if governments, corporations can't get their debt services, if they can't create debt, the whole system grinds to a halt, and the bond market runs that. Period. Dot end. So, all right. So now this is a reminder. So, what's between now and 2027, I see is this. And the reason I say 2027 I'm looking out to 2027, this bond thing I don't think it's all going to go away this year. Because bear in mind, this is me supposing here, guys. What I'm wondering is, will they refinance some of this as say a 10-year plus? And then maybe go very short term with some to kind of spread it out a little bit. And if you go short term enough, the Fed can print the money to do it. And it can do so somewhat quietly. It'll be out there, but it won't be on, CNN or Fox so much. Okay. So why will it have so much influence? Well, it'll have a lot of influence because it drives everything, right? Those interest rates move around. That 10-year bond is basically what your 30-year mortgage is tied to. So suddenly they're issuing, let's just say this isn't what's going to happen, guys. It's just easy to envision. They say we're going to put all $7 trillion of this on 10-year treasury notes, treasury bonds. Well, that's going to drive supply really high, and that's going to make rates go up. Well, that's going to make mortgage rates go up. We're going to hear about that. We're going to hear about the mortgage rate side. Well, then what does that do to the housing market? What's that do to housing employment? What's that do to, people who make furniture and appliances and all the things you do when you buy a new house, right? It goes down through all those things. Okay. So this is the way this debt is refinanced is going to drive a lot of things. It touches everything. Because now let's say it's done in an orderly way and they get 10-year treasury yields up to 6% in an orderly way that doesn't panic anybody. Okay. That's in a place called Fantasyland. Okay. But let's just say they get that to happen. Well, heck, for 10 years, I can lock in guaranteed money at 6%. I'll move some of my money out of the stock market and put it in that.
Yeah.
Oh, what just happened to the stock market? Supply and demand there too, right? We'll hear about that, right? So, and then what does that do to current holders of a 10-year treasury note? That just drove down their value, right? Now, if they're going to hold it all the way to maturity, they own that bond. That's great. But that's not how you own bonds inside of a mutual fund or what have you. They don't hold them. They trade them. That chart we saw where it went down 50%. Okay. Glad to do my part, Dr. Fuller.
Dr. Fuller says, I love it when Will is on. It is the most depressing educational time I ever spend. Johnny King says, wouldn't surprise me if we find our way into another war soon.
Well, gee, funny you mentioned that because isn't that how we got out of the Great Depression eventually?
That is correct, sir.
And if you break down how we got out of the Great Depression was World War II, that was money printing. Now, they sold off war bonds and they didn't just come out and print it as blatantly as they do now, but that's what happened, right? That's how we funded Vietnam and the Great Society stuff under LBJ, right?
Mm-hmm.
So what damage can this do? A lot.
Yeah.
Actually, if you go to the next slide there, brother, we'll start breaking this down a little bit. All right. So we touched on this one. Sorry, I got ahead of myself. Why will it have so much influence? Because it touches everything. Because also look at this as well, guys. Let's say you have a bond out there for a large corporation, XYZ corporation, right? And it's paying a 3% yield. Okay, it's their corporate debt. But I can go get a 10-year U.S. Treasury bond where they can print the money to make sure I get paid, right? And that's paying 3.5. Well, now this corporation, there's a risk the corporation goes out of business and I'd lose my money, right? So I'm not going to be happy with a 3%. I'm not even going to be happy with 3.5 because why take the risk? What's it going to take? It's going to take 4%, 4.5%. Depends on the company, right? But it's going to influence everything. So now suddenly it costs more for that corporation to finance their debt. Well, that comes off their balance sheet, right? What happens to their business then? Do they pay people less? Do they charge more? Well, I mean, we already see the consumer's breaking, right? You can only BNPL so many Chipotle trips, right?
Buy now, pay later is what Will's talking about. But yeah, that's
so
it's consumers breaking. That's a definitely a canary in the coal mine.
Right. So why will this have so much influence? Because it will eventually, through long and variable lags, it will touch everything in the economy. So that's why it will have so much influence. All right. Go to the next one there, brother. All right. So the bond market runs everything. You remember James Carville?
Oh yeah, he's still out there.
Yep, he sure is, the Raging Cajun, right? You want to read off what he says here, and then we'll talk about where this came from?
Yeah, he says, I used to think that if there was reincarnation, I wanted to come back as the president or the Pope or as a 400 baseball hitter. But now I would like to come back as the bond market. You can intimidate everybody.
Yep. So when Clinton was in office and Carville was, I believe, his chief of staff, Clinton wanted, let's remember, the first 2 years of Clinton was very far left politics. It was universal health care. Remember that? Hillary care.
Oh, yeah.
Right? All that stuff. They wanted to just go nuts with all this stuff because they had both houses of Congress and you had Clinton in. And they wanted to run far left. Clinton is now seen as a centrist, but that was only because in 94 there was a Republican revolution. Newt Gingrich took over the House and they drug Clinton back to the center. And Clinton, to his credit, was a savvy enough politician to see which way the wind was blowing from and move with that, hence his popularity. Okay, now that said, the first 2 years of the Clinton administration, they wanted to spend money like crazy. And an advisor went, "Oh, you can't do that. The bond market will have a fit." And Clinton very famously said, "What, you mean a bunch of bond traders can undo my entire plan?" And they went, "Yep."
Yeah.
And hence, this is where Carville's thing came from, because what held them back the first 2 years on the amount of spending they wanted to do was the bond market. Because the Fed can set their rates, but you can get what are termed bond vigilantes, where they just go, "Nah, we ain't buying it. We're not buying it at that price." And we're starting to see peaks of that bond vigilantism here and there now. They're just going, "Yeah, we ain't buying it. Not at that price." And that's where you can get into a failed auction. That's where not enough people buy. And typically you're referring to this as the U.S. Treasury debt in a given year or in a given auction when these auctions happen. Because that's how this is done. It's done by an auction. And people go in and bid on the bonds and then they get sold. So it's literally an auction electronically. That happened during the GFC, the Great Financial Crisis, housing bubble crash. That happened then. The buyer of last resort then was the Fed. And they made it known very publicly, we will come in and we will support these auctions. We're just supporting the auction, right, Rich?
Sounds benign enough.
Yeah, it does. Except until you realize that what that really means is they're the buyer of last resort. They would come in during the auction and make bids to try and spur other people to do it. And at the end of the auction, they just come in and buy whatever was left.
Mm-hmm.
How does the Fed buy stuff like that again?
Oh, Will, you're doing it to Dr. Fuller again, aren't you?
Yeah, they just print it. So people say, well, we'll never have a failed auction. Well, yeah, you're right.
That's
as long
true.
as the Fed buys it.
Mm-hmm.
But people in the stock market and bond market aren't stupid. They know who bought it. It's public information. I don't know how to access it in full disclosure, but it's public information. They're going to look at that and go, the Fed came in and bought a quarter of that auction. That's a failed auction.
That's right.
And we had a number of those during the depths of the housing crisis.
That's right.
Okay. So could that happen?
And the world didn't
here?
stop spinning, you know.
You're right. It didn't. But then again, I mean, I long for those days. Remember that? $11 trillion in debt.
The good old days.
Good old days. Yeah. I mean, yeah. But look at the response to each emergency. It just gets bigger and bigger, right?
That's right.
I'm reading a book right now. I wasn't planning on recommending it to you yet or publicly. It's called The Big Print. Really good so far. I'm about a fourth of the way through, and I've learned a number of things. In fact, the part I'm reading about right now is this exact part about how each time it just gets bigger and bigger, and it's the way every currency goes. All the ones you listed earlier.
Lawrence Lippard.
Yes.
Okay.
So, yeah, quite good book. So, and a lot of it is stuff that we've talked about. But I'm looking forward to the next parts where he gets into where he thinks it's going to go. So,
Okay.
All right. So, let's talk about these. So what's the worst case scenario? Go to the next one there, brother.
Okay.
Oh, back one. There you go. Worst case scenario is a failed auction. Okay. Mm-hmm. Now, this has happened before, as we just detailed, right? But timing matters. Mm-hmm. A failed auction during the GFC. If we looked at the fear greed index during the depths of the GFC, heavy fear, right?
Mm-hmm.
Well, at that point, if the Fed comes in and does that, whatever. Everybody's scared, right? It also matters during that period of time, it was like, think about it like COVID too. It was a flight to safety. Yes, I will buy that 2-year treasury bond. I just want my money back. I don't care about making anything. I just want it back. Stock market's going down, 10% a week, if not more. Just put me in something safe. I want to be able to sleep at night. Okay. So that's the whole rhymes versus repeats thing, right? There was a crisis during the GFC. There was a crisis during COVID. Therefore, when the auction failed, nobody really cared because they just wanted something safe, right? Mm-hmm. Let's think about when the things were going very well with the economy. Let's call it 2014 through 2020. Okay. If an auction had failed then, the perception would have been completely different, right? Mm-hmm. So we need to look at the timing and the mood of the world when these things happen, right? So that's the rhymes versus repeats. Now, as many have said, with this stuff, never let a good crisis go to waste. Well, a good crisis right now would let the U.S. government refinance a whole lot of debt, a fourth of it. Okay. So that's, maybe don't generate a crisis, but don't necessarily stop one from happening either. I don't know. Maybe I need a tinfoil hat for that.
Okay. I don't think you do, man.
I don't know. We'll find out. Time will tell, right?
There's a historical precedent for it. Let's be honest.
Yep. I believe there's more than one, as a matter of fact.
Yeah, that's right.
All right. So if we can go back to our list there, because my memory isn't what it used to be. And then, of course, what happens if the solution gets out of hand? Right? When I say the solution here, what I'm talking about is the Fed coming in and supporting these auctions by buying more. But what if it gets out of hand where it's so much that people start to lose faith in the currency because it's so much?
Well, that's all the currency rides on, right?
Yeah.
It's faith.
Yeah. So that's what happens when the solution gets out of hand. And if we think about our octogenarian legislators out there, think of Joe Biden, right? I mean, he's like, well, it's been working this long. And to an extent, it's hard to argue with their logic, right?
Mm-hmm.
Because let's face it, really, since 1980, it's worked.
It works till it don't. We talked about that.
Right. But so you just keep going back to that well over and over again, right? But what happened? But each time it just gets more and more and bigger, right? So at some point, the solution will get out of hand. Is that going to happen this time around? I don't know. Is it going to happen in our lifetimes? I don't know. But it's good to understand what it looks like.
It's the Monte Carlo fallacy too, man. That will eventually. I don't know.
And to Michael's point earlier, we're still the best choice out there.
Yeah.
And realistically, until there is a better choice, it's going to be the US dollar.
Mm-hmm.
All right. So what's the best case scenario? If you go to the next slide there, Bill.
Okay.
Best case scenario. Something happens in the world and fear takes over. You get a flight to safety and the interest rates drop as demand for U.S. Treasuries soar because somebody wants something safe. Okay. Now you'll notice the easy path for the Treasuries is a hard path for the people. So now you've got these two things that are trying to be balanced out there, right?
I was going to say unpack that a little bit because that's
Sure.
pretty profound there. Easy path for Treasuries, hard path for people.
So the easy path for the Treasuries is a lower interest rate, right? Well, interest rates went to zero during COVID. That was an easy path for Treasuries. How was it for the people?
Not good.
Treasuries went to zero. Interest rates went to zero post-housing crisis. How was that for the people? Yep, exactly.
Yeah, not good.
So interest rates, now we made it really easy on the people, right? During COVID, right? It was a fearful time, but we made, from a monetary standpoint, we made it very easy because we handed out money, right? Helicopter Ben Bernanke dumping money out, right?
Yeah.
And then how did it get for the people with 9% inflation? Yeah. And still going on with that. Got hard, right? Yeah, and right now we're in a right now we're in a hard path for people and a hard path for Treasuries. I guarantee the government's going to win because they control the levers, right?
Right.
So, it's one of those be careful what you ask for sort of things. I want an easy path. Well, we started, you go back to the dot-com bubble, right? There were bailouts then, and that the companies went out of business, all that sort of stuff. Yes. But markets were supported. Greenspan famously did that, started down that path. He left shortly thereafter. Right. And then during the GFC, well, we got to figure out a way to kind of smooth this out. Right. It was more money printing. And you remember TARP, and we've talked about it, right?
Yeah.
$700 billion. The world was going to end.
Troubled Asset Relief Program.
TARP. Yeah, that was the response to the global financial crisis, right?
And what did it cost us? $600 billion?
$700 billion. That's a rounding error now, guys.
That's nothing, yeah.
This year's deficit is 1.9 trillion, right? Basically a third of this year's deficit was what, everybody, especially on the political left at the time, thought was going to end the whole monetary system. And now we're like,
gasping, clutching pearls.
Yeah.
It's like, dude, we'd give anything for those heady days of $700 billion.
Right. Yeah. Chump change.
Jesus.
Right. So, so what's the best case scenario? Here's it's like when somebody has a whole lot of credit card debt. The best case scenario is kicking the can down the road somehow. Right? Get through another month, right? Now this can go on, to Michael's point earlier. This can go on. Who knows how much longer? 10 years, 20 years, the rest of our lifetime? I don't know, right? But we can see the path.
Yes.
You have children and I have children. And you got that precious little grandbaby now.
That's right.
Yeah. Yes. And I hope to someday, because I need to pay my children back. So the point is, we're trying to think more generational here, right? That's what I'm trying to do with my family is, educate my children, look for these things, and be prepared for these things. And then also I'm trying to set up not only their knowledge base, because I'm a big fan of what Bruce Lee said. Don't give your children what you wish you would have had. Teach them what you wish you would have known.
Yes, exactly.
Okay. So I'm trying to prepare them with this knowledge and also enough seed corn inheritance to utilize that knowledge with those resources to build a better life for them and their children.
Amen.
And that's what I really hope you guys get out of this is being able to see these things are coming. And also then you start to see with this, let's say treasury yields, let's say they put them all on 10-year notes, whatever. Okay. And treasury yields, interest rates go up to 10, 11%. Well, then that's going to drive the other things we talk about. And, why the, American Warrior Society and the training vault and that training matters, because all of a sudden that economic strife, that's going to cause social strife. Right.
Yeah. There's, when you look at what causes civil wars, you would think it would be, cultural issues is the number one thing, or whatever. It's really a budgetary crisis.
Yeah.
And these kind of things can definitely, what you're laying out here could definitely lead to that over the course of this administration. So,
yep. And then you can dig into the demographics of it, the fourth turning, right?
Right.
Yes. And all of that plays in together in one big witch's brew, and one side of the political aisle will point to one specific part, right? And the other side will point to one specific part. Well, they're all cherry picking their data to make themselves look good, and they're all completely full of bovine excrement.
And let's not forget, one person in this whole witch's brew is Hitler. We've been told repeatedly. So this is another unprecedented time. I know that they hated Lincoln, they being the southern states, but I don't even think they hate him with the same vehemence as the left seems to hate President Trump.
Yes, I agree. And that's a dangerous thing, not from the two assassination attempts, and I'm not dismissing those, but we see it. We see it on social media. We see it at gatherings, that hatred runs so deep that there's getting to be less and less rational thought and rational discussion about these things. And this scenario we've laid out, these things we're talking about, require rational thought.
That's right.
And the problem is it's become too much, on one side, too much hatred for Trump. And on the other side, too much of a cult of personality. Right? Both those things are bad.
I agree.
Yep. So, this debt maturity wall, as Don said, has been talked about for some time. And did they start refinancing stuff early? Now, sometimes you can't really do that because the bond is a 5-year bond. You can't just call a person up and say, hey, you want to refinance that. However, if it's the intergovernmental stuff, they could have redone it, right? They could have said, we want to sell this bond and we'll buy a 10-year or a 20-year or whatever. And
what was the last data you were able to find was 2016?
2016 for the intergovernmental percentages. Yeah. Yes. I searched it year by year and I couldn't find any charts on it.
So they could easily do that. We'd never know.
Yeah. And it would be buried in some Social Security Administration report on page 82. They could have done something proactive. And maybe they did to some extent. I don't know. Maybe they did it 5-6 years ago and it just happens to be come and do the same year as all this other stuff. I really don't know.
I don't know. Tony's question here. What do you think about that, Will? He says, any thoughts on the chatter about Trump suspending habeas?
I read one headline on it, so I'm ignorant on that subject. Other than that, my guess, if I remember correctly, and jump in if you know more than I do about this, brother, it had something to do with illegal aliens and deportations was like the sub headline I read, if I remember correctly. I'm against that first and foremost. However, I'm not sure how much
enemy aliens. I don't have a problem with it.
Yeah, if it is, and I don't know enough to speak even semi-intelligently about it.
I don't either. I need to read that, Tony, because I did see that flash across the screen this weekend, but we had company and I'm crazy busy. Yeah. But I'm going to get on it.
Yep. So, I mean, I think this is going to drive a lot of things in the next couple of years. And let's face it, your average low information voter out there, both sides of the political aisle, is not going to dig into this or understand that this refinancing of debt that has to happen is going to drive a whole lot of other decisions. They're going to look at it through a red prism or a blue prism, and it's actually a green prism. It's all about the money, right? But it's going to come out in different ways. To one extreme, we have to cut Social Security by 25% immediately. Okay. Totally out there, totally made that up off the top of my head. Well, but then it's, so-and-so is the devil because they want to cut Social Security by 25%. Well, here's the reason, right? So on the flip side of that, we need to print a whole bunch of money, have the Fed go in and make these auctions happen, right? Well, now there's going to be inflation. So then the other team's like, hey, this happened because of, this person in whatever political office. No, it's all happening because of this debt.
Yeah, thank you.
But it's going to get spun by each side one way or the other. So, yeah. But I think this is the root cause of a lot of problems coming in the next, couple years.
Yeah. Between now and 2027.
So, all right. So most likely scenario here. Okay. My Magic 8 Ball is still on hiatus. So the future is unclear. Okay. Yeah, no kidding. All right. It's going to be impossible to kick this can. Now, could they do like maybe some very short-term paper, maybe some 1-year notes, some 2 years, some 5s, some 10s, some 20s, some 30, and spread it out a little bit? I would assume that's what they're going to do. But then you're also, if you do that and rates go up, interest rates go up, then now you're locking in that longer term rate for a long period of time, right? And as the government, you're locked into that bond. That's it. It is what it is. Okay. We understand from reading his book, we understand what Trump does, right? How he negotiates, right? These tariffs were ridiculous amounts.
He said in his book, I highly encourage you to read it. It's like, I'll say crazy things just to get a reaction. I mean, that's pretty much an exact quote.
Yeah.
I just, if they're not giving me a reaction, I'll just say something completely crazy off the wall just to make sure they're paying attention.
Yeah.
It doesn't mean he means it. It just means I'm trying to get a reaction.
Yeah. Look up, Barbara Cochran. She's one of the sharks on Shark Tank. I just ran across a YouTube clip of her talking about Trump, and very complimentary. I think they're very different politically. I think she's very liberal, if I remember correctly. And she talks about how he negotiates, and she was very complimentary of how he negotiates. But it's like he'll say stuff that's just like, huh? What? And it's just to get that. And just as you said that, I likened it to my boxing days. You throw a jab to see which way their head moves.
That's good. Love that. Yeah.
Right. And now you know where the right hand's going.
That's right. That's
right.
Great.
If you always move your head one direction, then I'm going to throw the jab to get you to move your head, and my right hand's already going there. I don't know.
Well said, brother.
So, but there's no two ways about it. Trump's back and forth, Canada's going to become the 51st state. Is that part of the reason the Liberals won there? Yeah, probably. Yeah. So
he came out and said he wasn't really supporting that Pierre Pont. I can't pronounce his name. But
I can't either. But that roils markets, and markets that are all churned up. That's a lot of volatility. People see it come out in their 401k, right? I mean, look at the NASDAQ in April. At one point, it was the worst April, I think, ever since the Great Depression.
Yeah, bloodbath.
Right? And it came back and basically was at break even for the month. But that volatility makes people anxious, right? Yeah. Okay. Now, a royal market, though, they feel anxious, right? They want something safe.
I tell you, man, I had to talk a friend off the ledge. He lost, a couple $100,000 of hard-earned money, and I'm like, hey, it's an unrealized loss. Relax.
Yeah.
You've not even turned 50 yet, brother. You're good to go.
Yeah.
You're going to be fine. This is an opportunity to snap up some things you've been wanting to buy up. You know what I mean? It's like, but if you're new to the market or you're low information voter, and I'm not saying he is, this kind of stuff scares the hell out of you, man. And that's like, hey, man, relax.
Yep, absolutely. So, this gentleman you're talking about, he was feeling very anxious, right?
Yes,
feelings, absolutely. Right? And feelings run people, and people run markets. So if you get enough people feeling that way, and I'm not saying this is what Trump is doing, but then they want something safer, like U.S. Treasuries.
Exactly.
Suddenly there's more demand than there was before. That drives price down. We call price interest rates. So here's one to really watch, guys. Does Trump just wait out to J-Dog's Jerome Powell, chairman of the Fed? His tenure is up May 15th, 2026. Does he try to kick this maturity wall kick the can far enough down the road to get past J-Dog? Because the other guys are already applying for the job. Watch their talks, listen to their talks, when they're interviewed. The guy in the lead right now is a guy named Waller. He's as dovish as they come. He's all but come out and said, Trump, I will do whatever you want. Who do you think Trump's going to pick?
Yeah, exactly.
Okay. I mean, it just is what it is. Same way if Biden would have had a chance, or Harris or Obama. I mean, you don't pick somebody who's going against your agenda. I don't care who it is. Right.
You know what I like about that is May of 2026, that still gives you time for that 6-month midterm cycle. But when everybody has to go home and get reelected, now you've got your guy in there, and you can really sell that as a huge victory. I think you're really onto something.
Okay. Now you want to go a touch deeper on that one?
Yeah.
Because I was thinking about that too. Does that rhyme with President Nixon and Arthur Burns?
Sadly, it does.
It does, doesn't it? And Burns was the Fed chairman who capitulated to Nixon and lowered interest rates as inflation was coming down, but inflation was still very entrenched in the people's psyche in 1973, and then inflation took off. So if you get a Waller in there who is very accommodating, dovish in the lingo, will lower interest rates for Trump, and suddenly money gets cheaper. Do people go out and spend? And at the same time, maybe tariffs go away, so there's more products running around. Yeah, it could all come together in one big stew. So, and then here's the last thing, and this is more from a political side. The system, the establishment, if you will, would love to see Trump. Yeah, would love to see Trump fail, because it would permanently tarnish any anti-establishment figure for the rest of our lives, for sure. Right. So would that, for the establishment, the deep state, the smoke-filled back room,
swamp,
would they be willing to endure 5 years, whatever period of time you want to pick, of great economic pain to make sure that the establishment is never challenged again?
Yes, they would.
Yep.
Absolutely.
Yep. So this is another one where if we can see these things coming, we can get properly prepared for ourselves and our families, which is why two self-defense guys talk about this stuff, because that's part of protecting and defending your family.
Yes.
And there's the ball.
Yeah. When I was in the police academy, and there's a lot of former police officers in there, of course, Alan Kelly, 30 plus years, the Virginia State Police. It's like, hey, you just don't survive an encounter, physically survive it. You can physically survive it, and you're in a wheelchair for the rest of your life, or you can physically survive it and be completely fine, but you're financially destroyed. You lose your house, you lose your income, you lose your job. You can survive it in every way, but you're not spiritually and mentally and emotionally ready to take that other human being's life, and now you're destroyed that way. And I've seen that. A guy that went from being a police officer his father was a very famous cop in our area. He killed a guy one night. It was a justifiable shooting, good shoot, but he wasn't mentally there, and he ended up in a lunatic asylum. And I don't know what they call them. I don't mean to be pejorative on that term, but he escaped one night, and I am the guy that caught him and took him back. But it's that's why a couple of self-defense guys I think are talking about this.
Because this is all part of the preparation, right? We want to be prepared for that, encounter at the gas station, a home. We want to be prepared for all those things. But there's more to being ready to take care of your family than just that. Now, that's an ultimate one. That's huge, right? I want to be prepared for that as well. But there's other facets of life that can harm our families.
That's right.
So what's this one say, brother, to take us out?
I love this, man. Don't cling to a mistake just because you spent a lot of time making it. That's so true. Again, this is we talked about it earlier, it was sunk cost fallacy, right?
Yep.
I've got so much invested in this. I got to keep going. And
And part of that becomes ego, right?
Yeah, absolutely.
I don't want to go back and go, you know what? I was wrong about that.
Yeah.
I was wrong about investing in whatever. I was wrong about buying that Keltec. Right. Which is why there's still one sitting up in my gun safe, mainly because nobody ever want to buy the darn thing. But hey, it was a good price, but once I realized it was a piece of junk, I bought something else.
There you go.
So yeah, so that's, so all of us need to kind of take a step back and go, you know what? Hey, there's nothing wrong with saying I made a mistake.
Yeah.
I mean, in the investing world, the best guys bat 550. I mean, you're a living legend if you bat 550.
Absolutely. If you're 51, you're guess what? You're going to be okay long term.
And you can bat less than 500 and make money. Just stay in the winners and get rid of the losers. Right.
So today, as Will and I talked yesterday, today is kind of the foundation for the series to come. Is that correct, Will?
Yes, that is correct. Yep. So I actually plan on starting that series today, like we talked about, but I came across this subject and was like, you know what, this is going to drive so many of these other things that if we just talk about the other things without understanding the basis of what's going to drive, I think, a lot of the market over the rest of this year and probably into next year, then, I think we're shortchanging ourselves in our thinking and looking too much at symptoms, not enough at causes.
Yeah. I agree. TC Phillips says happy Cinco de Mayo Day. It's also, was it Square Root Day? You got, 525.
Yeah, sure is. Yeah.
I remember the first one that I can remember, 9981. And my math teacher made a big deal about that.
Yeah. So,
all right. TC Phillips says.
Says great show. Smarter now than an hour ago. Now he's going to day drink. Well, it's one of the many services we provide here at the Coffee with Rich show.
That's right. And Will, if you would take us out, my dear friend.
The fight's coming. Be ready.